Fellow traders, 'tis I, the Rumpled One, coming to you on Wednesday, July 9th. The year's 2025. Let's talk trading. Automation. These videos are for educational purposes only, and your results may differ from mine. And whether or not you use automation, you definitely need to have your risk management in place. That way you don't lose more than you're willing to lose on any one single trade or during any one single session. Now, automation. I had someone write me and they said that they were asking about the rat zone and they wanted to use an automated take profit and stop loss. And he wanted to know what has to happen in order for him to succeed. Well, if you think about it, you might have to ask a different question, better question. Number one, is the rat zone something you want to automate? You know, the problem that most trading methods have with being automated is they run them too much. They run them in such a way that it'll, basically burn through the account because a lot of times they're running 24/7. When I used to run the buy zone back in my trade station days before they kicked me off a trade station, I would run the auto Avery right at market open. And I had a pretty small goal. If I remember correctly, it was about $500 a day. And usually within a few minutes, auto Avery would make $500. In fact, one time it made it so fast I thought something was wrong because I had the order filled. It went order filled. I'm like, what? What the heck just happened? I thought I had a bug in the program. Well, what happened was it had bought BIIB stock and the stock shot up. Now I was buying 1,000 shares at a time and it shot up like 50, 60 cents. And what had happened, it also bought another stock. Well, the way the Auto Avery portfolio manager was programmed, it looked at the total performance of the portfolio, and once it hit the 500, it just closed down everything and shut down. And that's what had happened. Auto Avery entered, and the Auto Avery portfolio manager exited. It was so fast, it was like you said, it was a blink of an eye. Point being is that if you want to automate something and you want to be successful, you have to find a sweet spot, and you can't get greedy. You don't go to the well more than once. You just hit it and quit, as James Brown used to say. Can I hit it and quit? But even when you're sitting in front of the screen all day or half a day or whatever, when you're trading, if you can hit a daily goal in a short period of time, some people say, well, hey, so long as you're winning, keep trading. It's like, yeah, you can go into what I call sudden death overtime. As soon as you have a loss, you're out. You're done for the day. You pack it up and you leave. If you think if you're on a hot streak, but just on a normal day-to-day grind, no, you don't want to sit there all day. I think Walmart, like I said, he's on a tear right now, but I think normally he does about maybe 2-3 hours and then he quits. And sometimes he might come back for an evening session, but then again, it's, usually just a small amount of time. It's not all day. But what happens is traders will probably get in a trade. Maybe they win, they lose, they win, they lose, they lose, they win. And they keep trying to make back those losses, especially if they lose a few times in a row. And it's just basically the beginning of the end. They're uh, they're basically over trading, and that's the thing with an automated system. You really have to be able to pick, um, only the A plus trades. You don't want an automated system taking, B trades or C minus trades, or F trades where they're just going to fail. You shouldn't even be in that trade. You want the stars to align, the moon to be in the right house, et cetera, when that thing takes a trade. And if you have a system like that, um, that can steadily win, maybe it only takes you one, two, or three trades and you're done. It's done. That's how I approach it. That's what I look for. And then you come back the next day. And then you come back the next day. You just keep doing it over and over again. And then it just stacks up. Now, the thing is, some people like to increase their stake. So maybe you're trading a dollar pip, and then the next week they want to trade $1.25 because they won, and then the next they want to trade $1.50. Well, sooner or later you're going to have a loss. That's just part of trading. And the problem is maybe you've ramped it all the way up to $2, and then in one trade, depending on how you have your settings set, it wipes out your entire winnings and maybe even puts you under. And that's something you want to avoid like the plague. You really do. You know, I'm looking here, he was talking about the rat zone. Here's a H1. You know, look what price has done. It has basically just been going in between the rat zone here. Maybe I should go to the usual rat zone screen that I have. But you can see it right here. It's just been going between the zones, actually in between the smart rat zones. And that's about a 20 pip range. I mean, you could have slaughtered the market when price is moving like this. Notice it's 25 pips, now 24 pips above the daily open. Um, and I just looked just a short time ago, price was down here because I was at the top of the hour when I started looking at price, and it's just crossed that daily open and it's moved right up. Actually, it was testing that daily open, if I remember correctly. Let's see, right here. And so, I mean, in the past couple of hours, there was a couple of nice buy zone trades you could have taken too. So, the whole thing is, you know, how can you find something that you can automate and be happy with? Now, one other thing about automation, automated trading doesn't mean unattended trading, at least not to me. It's not the same thing. Because if something were to go wrong, if you were to enter a trade and all of a sudden your computer died and you didn't have the stop loss and take profit loaded, who knows what's going to happen? You could get slaughtered that way. So you should be paying attention to what's going on. And you should also have a backup. What if the computer that it's running on freezes and now you're at the mercy of the market? So before you take that step into automation, you really, really need to look at all the factors that can affect your trade. Even when you're trading normally, you should have those same backups available. Maybe I'm using my laptop, but I also have my phone. If my laptop freezes, I can switch over to the phone and handle the trade that way. Now there are some things that I might automate. So, for example, if I want to make sure that I always have a stop loss, I might have my auto EA um, that checks for stop loss. If it sees a trade out there without a stop loss, it'll slap a stop loss on it. That way, I can only lose 5 pips or 10 pips, whatever I have it set to. So I might manage the upside, but I make sure I have that fail-safe downside. So maybe you might only want to automate part of it. You might want to automate the entry part because maybe you're hesitant, maybe you rush to trade, so you let the computer get you into the trade. Maybe you have the computer put your stop loss on to protect the downside, and maybe you just want to manage when you get out of the trade. I mean, that's part of it too. You can have partial, have the trade partially automated rather than full automated. So, but the question really was, about the rat zone. Would I automate the rat zone? I could automate the rat zone, but I'd have to put some other conditions on it. So, for example, prices in the rat zone, you know, make sure that the range is large enough. And maybe I want to make sure I'm only trading with a certain bias. So, for example, here, I haven't played with this indicator in a long time. Let me see something. Let's see, we've got, yeah, just like I thought, I have the biases hard coded. I might have to update this because, as I mentioned, I like to look at the M30 because I notice how often the candles get covered. So you can see here, this candle didn't get covered. This candle didn't get covered. This candle got covered. But from since that time, so it's like we've got this candle got covered. So we had a couple in a row that didn't get covered. Then we had cover, cover. Okay, now this one didn't get covered. This one, it took it 2 bars to cover it, but it finally got covered. And then this one right here covered in 1 bar. So, these big bars are return bars, and sometimes it'll cover it on the next candle, and sometimes it takes it a few. So this one, that looks like a return bar. Look how big it is. It got covered. So you might want to, look at, okay, have it, did the previous candle get covered? Yes or no? Maybe you say if it's a no, maybe you want to take the trade, or maybe you don't want to take the trade. Just depends on, how you want to trade it. So right now you can see we popped out of the smart rat zone up here. You can see we only had, looks like, one close in that smart rat zone. And so maybe you might want to use a smart rat zone and say, okay, I'll take the chance, but maybe you only go for a few pips. Maybe you don't want to take the chance because you don't want to trade against that candle color. So, fellow traders, if you're going to automate, you got a lot to think about because I want you to always remember and never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.